Ladies and gentlemen, welcome to It's Rainmaking Time. This is Kim Greenhouse, and I'm so excited today. This is one of my all-time favorite shows because you are involved in everything that's going to be said today. When it comes to money, when it comes to finance, when it comes to the economy, when it comes to investment, you are directly involved. Some say and really believe that central banking has deteriorated the entire financial economy around the world. Some people say if you're not invested in metals, you're not really invested in real money, and that we've actually lost the ability to exchange and to do business in real money, that the economy has been polluted and diluted. In fact, the Federal Reserve, we found out, is not federal. It's a private bank. It's actually a private agency that was taken by stealth in the middle of the night with our Congress. The facts are that we are not living in an organic economy. We're living in a synthetic economy of credit default swaps, derivatives, which have taken down industry after industry, high-frequency trading, securities that actually constrain people that want to bring new projects and products into the world. And the reality is that, thank God, crowdfunding is here. Crowdfunding that started by donation-based crowdfunding. And in September of 2013, on the 23rd, the equity crowdfunding laws changed. The Jobs Act allowed people to actually market their projects and companies. But the devil's always in the details. We have Sam Guzik with us today of Sam Guzik and Associates, who's going to get under the hood of the new crowdfunding laws on an equity level, and he's going to tell us where the rubber meets the road. Because in fact, this great opportunity that we were so excited about on an equity level is not quite what we think it is. It's exciting if you like a tiny, tiny portal into potential. We're also going to talk about the most exciting cryptocurrency, payment system, trading platform, Bitcoin. Bitcoin has been around for 5 years. It is considered by some the money of the now and the future. Some look at it as the escape from the Federal Reserve central banking, hostage-making lockdown on all of humanity. So many people are in prayer and hoping that Bitcoin is the savior to help us move our money inexpensively, to create another currency which can't be inflated. There's so much hope and so much tension and so much desire for Bitcoin to work. Some are skeptical. Some say it's the mark of the beast. Some say that the government is already involved in it. Some say that no matter what you do, that we're going to be legislated out of business, that there's no way to get out of the control grid. The reality is that Bitcoin may be just an incredibly exquisite collective transition system into something else. But what is that something else? And how do we stay away from being inflated to death? On the show, I have invited Andreas Antonopoulos, who is a Bitcoin visionary, who's going to talk to us about cryptocurrency. He's a programmer of high order. Dave Scotese, who is a programmer and a Bitcoin trader, who's joining us from Riverside, California. He's the founder of Litmocracy. We have Sam Guzik of Guzik and Associates, who's going to talk to us about crowdfunding. And we also have, God help us all, Reggie Middleton of Boom Bust blog. He's considered the Nostradamus of finance. He is the one who called the collapse of Bear Stearns and the housing market crisis. He warned the public about the fall of Lehman Brothers. He has made a call to short Apple at its all-time high. He makes distinctions that people never knew before about the mobile computing industry. And he has talked about how Facebook and Goldman Sachs have been overvalued. Ladies and gentlemen, welcome Reggie Middleton to It's Rainmaking Time. Welcome.
Hello, how are you?
I'm more excited than you sound. But you're so calm. I think it's good that you're doing the trading and the analysis. Are you sleeping? What's going on there?
Well,
but anyway.
I was listening to your introduction. I'm like, wow, I'd love to meet that guy.
I think he's here with us. Well, first of all, You know, we've had you on a year and a half ago. We had a very long 90-minute discussion about the banking system and about the marketplace, the sovereign debt crisis. And I want to understand, first of all, your take on what Bitcoin is, and then we'll get to why you've created a product or some type of a prototype to attach or connect with Bitcoin. First of all, what is it in your view, Reggie?
Bitcoin is a digital currency based upon cryptographic science, cryptography, and it's probably one of the most severely misunderstood hot media topics of the last few years, more so than probably the bank crisis, the sovereign debt crisis, and everything. The reason is people focus on Bitcoin as a currency as if it's the U.S. dollar or the euro or the renminbi or the yen, and that's not what it is. It's a currency, a digital currency in part, but the more exciting part, the more evolutionary part, the more revolutionary part is that it has its own transmission system as well. It's a protocol. This is an analogy that I've used on, several times, and I'll use it here because I think it's a point home, particularly to lay people who are not, experts in cryptography, which is probably 99.999% of the population, including myself. Imagine if you had a car. You had two cars. One car is a Mercedes-Benz, and it normally goes for $110,000. Steady in price over the last few years, considered high quality. A lot of people use it. Then you have another car called a Wrestler that nobody's heard of. Last year, the car was selling for $20,000. This year, the car is selling for $1.2 million. And then you have everybody who's up in an uproar, or this car is a Ponzi scheme, and it's a bubble, and, it's went up, 20, 30, 40 times in price. It's worth it. What's going to happen. And these characterizations, these perceptions are plausible. It definitely looks bubblicious when something goes from, say, $20 to $1,200 and then back to $600 up to $800. But if you take a look at it as a currency, like the U.S. dollar or the euro, that's the first thing that comes to my mind. But imagine if this car, right, comes with its own roads. And these roads belong to the car. Only this car can travel along these roads. And these roads allow the car to go through all over town, through any city, through any state, through any country, any continent, all over the world, overseas, over oceans, through rivers. It pays practically no tolls whatsoever. Keeps any bridge or any toll. As a matter of fact, this car could go anywhere there's an internet connection. Okay, so not only can it go anywhere in the world that you have an internet connection, not only do you not pay tolls that are so minimal that you don't even recognize them, but this car is also faster than all the other cars in the world. And this car can be used at any time you want, okay, not just during banking hours where the other car is, not just during times when the government wants you to be able to clear a deal, such as the Cyprus debacle where you had the bail-ins. But this car is available 24 hours a day, secure. Now, if you compare these two cars now, would a car be worth $1.2 million if it could bring you anywhere almost instantaneously with no cost?
Hold on one second, Reggie. Can you pull in Dave Scotese from Litmocracy? Dave, do you agree with what Reggie just said? Welcome to the show.
Thank you. Yes, I think that he described it very well as a car. I think I want to get one of those cars.
We're all going to get one. Now, Reggie, I hear you're buying the cars for us. Is that true?
Wait, I already have one.
You have one?
I sure do.
Now, tell us, you're a programmer, Dave. Why do you think that Reggie's right about this?
Well, because he is right about it. It's he called it a protocol, which I don't know if a lot of people understand what that means to us computer geeks. A protocol just means that's a way of doing things. So we have protocol for email, and everybody's familiar with email. It's like the Pony Express or the mail system. But just like he said, it's lickety-split, and it costs almost nothing. So we're all familiar with email, and Bitcoin is basically, email for currency.
I want to go to Andreas Antonopoulos, who has actually said that Bitcoin is the internet of money, not money for the internet. Am I correct, Andreas?
Yeah, absolutely. Bitcoin is a system for people to transact money from anywhere to anywhere in the world instantaneously with little or no fees. But the currency of Bitcoin is just the first application. Just like on the Internet, email was just the first application. Internet isn't email, it's much more than that. Well, Bitcoin isn't just a currency, it's much more than that. And you can do a lot more things on top of the Bitcoin network than just the currency. But the currency itself is revolutionary.
You're such a huge advocate about Bitcoin, Andreas, and Reggie, I know you are, and Dave, you are, since, you're all in. But you're in also with caution, you're in with forbearance, you're in with excitement. Now, Andreas, why do you, when you give your talks, talk about Bitcoin possibly, dissolving out? It's a transitional platform or medium, and then really cryptocurrency of the future coming out of that. I heard in one of your talks you talk about that.
Well, I'm not going to necessarily pick winners and losers right now because things are very early in this particular space. But the point to understand here is that the word Bitcoin really refers to three different things. There's Bitcoin, the currency, and this currency runs on top of Bitcoin, the network and platform, which is the Internet of Money. And this is based on an idea, an invention invented in 2008, which is the system that creates Bitcoin, which allows people to have consensus or agreement across the distributed system. And if the currency fails, the network will spawn another currency. And if the network fails, the invention still exists, and already we're seeing more than 100 alternative implementations of this currency. So just like tomorrow, if email went away, the Internet would still be there. And if the physical network of the Internet went away, the invention and the understanding of its value would still be there. Bitcoin is a lot more than just a currency, and I think it can survive. But as we see right now, it's growing very, very fast. It's in year 5, and I think it's already established a level of adoption and awareness in the public that is going to be pretty much unstoppable.
RoboCoin started, which is the Bitcoin ATMs, and they're pumping them out all around the world. And in RoboCoin, you have to actually authenticate through biometrics. Now,
that's an optional feature. It depends on the country where it's deployed, and there's many other ATMs too.
Oh, I didn't know that. Okay. So my question is this. Some people say, and Reggie, I want you to pipe in on this too, and Dave, that because of the inner workings of Bitcoin, that there is something called distributed blockchains. What is a distributed blockchain? Why is it relevant? Let's start with you, Dave.
The blockchain is a database. You can think of it as a public ledger. Actually, it is a public ledger. Anybody that's running a business knows in their ledger they have several accounts, and they might move money from one account to another in order, to allocate some profits to marketing or whatever. Bitcoin works the same way, and the blockchain is that public ledger. The next thing people should be thinking is, how does if my ledger on my business was public, I'd have people coming in and moving money around willy-nilly, and I wouldn't have control of my business anymore. So how do we stop that? And that's where the Bitcoin protocol comes in, where in order to move money out of an account, you have to know the secret for that account. And that, because of dual key cryptography, the secret never needs to be given to anybody. It's just used, and it proves that you own the account that the Bitcoin is leaving. And so once you give that proof to the internet, it gets into the database, and then the whole database and everybody who has a copy of it knows that this Bitcoin has moved from your account to somebody else's account. So that's what the blockchain is. It's a public ledger that keeps track of all the transactions. Somebody
asked me just yesterday, can't it be hacked? And why can't it be hacked? And I said, I don't think so. And they said, of course it can. And I'd like Andreas to answer that, and then I want to have a question for you, Reggie, about your product.
Okay.
Well,
Andreas?
It's not as if no one's trying. I mean, everybody's been trying to hack Bitcoin for the last 5 years nonstop. It's one of the hottest targets for hackers around the world, and the reason for that is because it's the ultimate stealable money. When you have extremely fluid currency that can be transferred anywhere in the world in seconds, and disappeared into that transactional network, of course people are going to steal it. And at the moment, the network is worth almost $10 billion, and yet no one has claimed that bounty. Think about it as a bounty. If you were able to hack Bitcoin, you would have access to $10 billion worth of funds. That should be enough to motivate everyone in the world to try, and they already have. So the system is robust. It's based on some simple mathematical rules, and underlying it are encryption primitives that are used not just to secure Bitcoin, but the same encryption systems are used to secure all of banking institutions, all of the wire transfers in the world, all of the nuclear missiles in the world are based on the same encryption primitives, their security. So, hacking Bitcoin, lots of people tried, not so easy apparently.
Reggie, what did you create in terms of your product, and why are you invested in this new prototype for Bitcoin? Explain what it is. It's called a zero cost. What is it?
These are zero trust contracts.
Zero trust contracts. Sorry about that. Explain it to us.
They're basically a way of making a financial deal with another party that you do not have to trust at all. And as a matter of fact, you don't have to know who they are. Again, as I was explaining Bitcoin, where a lot of people are focusing on as a tradable currency, capital loss, capital gain, that's interesting, but that's not what caught my eye. What caught my eye is the fact that Bitcoin is programmable. It's smart money. In direct contravention to what I would call dumb fiat money, the typical coins and paper that's used to. Let's pick on $1, because that's the deepest, most liquid currency available. A dollar bill is dumb. It's a piece of paper. If we have a transaction, I buy a car from you. I give you $10. I give you $10 for the car. You give me the car. I drive off. 5 seconds later, the car transmission drops up. I have two alternatives. I can ask you to give me the money back, or we can fight over it. Anywhere from physical fist fight to litigation, arbitration, court of law. But I'm at a loss unless you voluntarily give it back. That's a trust issue. With Bitcoin, there's a scripting language where you can ask the currency to do specific things according to an agreement or a contract, and it will actually do it. So now I can give you, say, 1 Bitcoin for that car, okay, and I can program it to say that 1 Bitcoin will not be spendable, okay, by either party until we both agree that the transaction has been fulfilled, to both of our satisfaction.
So is this really an escrow account? Is it kind of like an attorney escrow account for Bitcoin?
No, it's actually very different, because an attorney escrow account needs an attorney. You need a third party that you trust. These are zero trust contracts. So there's no need to trust anybody. Not your attorney, not my attorney, not the bank that you put the escrow account in that would give you counterparty risk, not the other side, and not even yourself. Again, zero trust.
Mathematical escrow.
What was that? What was that? Who was that?
That was Dave. Dave says mathematical escrow.
Right.
Oh, wow.
In layman's terms, you take the money, and it sits on the blockchain, which is that general ledger. And it stays there until we're all satisfied that the deal is done, and then we sign off on it, and then the money is released to whichever party, depending on the contract goes. That's a simple contract. These contracts can get very, very complicated. Very complex, not complicated. And you can do a lot of wonderful things. Right now, what we've instituted was swaps, where we can swap exposure. So if I have $1 million and I want to get into Bitcoin, I buy Bitcoin, and now I have Bitcoin, and now I can swap my exposure back into US dollars. This allows you to hedge the volatility of Bitcoin into the US dollar. So it's as if I still have my US dollars in terms of volatility, but I physically or digitally still hold the Bitcoin. This could be done with any of 24 fiat currencies. So you can do a variety of very interesting things, such as you can trade back and forth, but just the exposure with any fiat currency you want. You don't have to worry about counterparty risk, because the principal and any collateral is locked into the blockchain. So you don't have to worry about other side defaulting, changing their mind, having piano lessons when it's time to come for settlement, or anything else. I was so excited when we first got this first off to work. I didn't speak for 3 days because I see this as a potential to recreate the entire banking system through software and cryptographic means. There's so many things that you rely on banks for that you don't have to rely on them for. And more importantly, so many things that banks and financial institutions overcharge you for. I'm about to put up tomorrow, I plan on putting up a post to my blog that explains how I use Overstock.com, which is an internet retailer. They do about $1 billion a year in revenue, and they were the first major retailer to accept Bitcoin last Friday before last. On the day they opened up, they did $130,000 of revenue, Bitcoin only, 840 new customers, and it was phenomenal. That was phenomenal new business for one day. The problem is it was very volatile. You know, Bitcoin is very volatile. So they decide that they want to translate the Bitcoin back to U.S. dollar. Well, this product allows them to keep it in Bitcoin, hedge into the U.S. dollar if they wish, and it drops their transaction cost significantly. So this product adds about between 15 to 30% to Overstock's bottom line, and it allows them to accept currencies from a wide array of people. Overstock has a 1.9% net margin. A lot of their competitors, sans eBay, actually have negative margins. So I can actually give them a profit where they had a loss and expand their potential customer base and drop transaction costs.
This sounds like a new industrial complex. Andreas, the Winklevoss brothers I guess they have a % interest in Bitcoin now, and they want to start a Bitcoin ETF. And Reggie, I also want you to respond to this. And my question is, what do you think the regulators are going to do? I mean, do you think this is a transitioning currency?
Well, I was hoping we'd talk more about smart contracts and counterparty risk, but if you want to talk about the Winklevoss brothers, not so much about that. It's just that I just find it interesting that they want to create an ETF. I thought Reggie would find that interesting, but go ahead. So there's a lot of people at the moment trying to create various either actively managed ETFs or passively managed, more like index funds that closely track the exchange rates of Bitcoin and allow you to own Bitcoin. The goal here is to allow institutional money to invest in Bitcoin, because while a consumer will look at Bitcoin and think this is very volatile, it's kind of scary. Certainly if you're an inexperienced investor, it can be very scary. It's a very high beta investment. But to a portfolio manager who's managing an entire diversified portfolio, having a high beta asset to put in their portfolio is extremely attractive, because they're going to manage that as part of a diversified portfolio, so the beta doesn't scare them, the volatility doesn't scare them. In fact, what it does is it allows them to make money off it. So what we're looking for is mainstream acceptance of Bitcoin, where a teacher's fund or a fireman's union can put a tiny fraction of their money into Bitcoin through normal and legal channels. I think we're going to see that in 2014. There's already dozens of organizations trying to do this, and they're not just trying to do it in the U.S., they're also trying to do it in various other international markets. And, for institutional investors, the world is one big market. So if the SEC doesn't allow it to be listed here in the U.S. on the New York Stock Exchange or NASDAQ or some other market like that, then it's going to be listed overseas in other markets. I mean, that's the thing about Bitcoin. It's very fluid. In either case, I think institutional money will be flowing into Bitcoin in 2014.
I'd like to call upon Sam Guzik, who's here, who's an SEC attorney in Los Angeles. Sam, I'd like to know, this is the first time you're really hearing deeply into Bitcoin. What do you think, since you know the SEC so well, what do you think that they would say to this?
Well, I mean, as far as ETFs, I don't think they'd have any particular issue with it other than disclosure of what it is, how it works, and what the risks are. But it's something that's obviously here to stay. It's in its beginnings, and it sounds to me like this is going to be huge, both in the U.S. and globally.
Do you think the SEC is going to try to block the use of Bitcoin, or somehow get involved, or start punishing or fining businesses that are using it at a certain point?
No, I don't think so. The SEC is mainly about protecting people through disclosure. So I don't think the SEC is going to be an impediment. I think they're going to be a facilitator, but it will take them some time to get up to speed. They will be cautious. Their interest is in protecting the investing public, so therefore they're going to want to understand it thoroughly. So I expect they will move with it, but they will move slowly.
They barely understand crowdfunding, isn't that true?
Well, they're starting to learn more than they ever wanted to. I can tell you that.
Ladies and gentlemen, we're going to go to a quick break, and we'll be right back. I wanted to share with you about a company called Essential Mother Earth at essentialmotherearth.com. And I want you to consider that now that we have so much evidence that we are not only electrical bodies, but we are light bodies, and that we are living in a very huge assault environment of electromagnetics, of cell phone towers, of microwaves, of Wi-Fis, of all of this stuff. And the body is not receiving this very well because this is not meant for biological systems. EssentialMotherEarth.com provides health and wellness products, and one of the products that I want to recommend you take a look at is called Aura Light, which enhances your vibration. It enhances your auric field. We know that there is an auric field. We know that this is measurable, and we know that we are electric beings made of light. So if you want to enhance your light body, go and get Aura Light from Essential Mother Earth. And for those of you interested in the necklace that I'm wearing, it's made of magnetite and hematite and rare earth jewels that actually form a loop. It actually forms a circuit to prevent radiation from entering your body. So men can get them for bracelets, and there's also necklaces in different colors. Go to EssentialMotherEarth.com. They're a great couple that runs the company. And for those of you that also would like magnetite and want to charge your water, they have magnetite. They have many, many fascinating products that I use and love. So go to EssentialMotherEarth.com. And back to the show. Dave Scotese, what is your answer to if you think Satoshi is a real person or Satoshi is simply a figment of our imagination and this whole thing was created by DARPA? Some people say DARPA created this whole thing. This is a grand experiment, and we are not aware that we're being experimented with to form a one world system. Do you agree or disagree?
Well, I have to take a middle road. I don't think that DARPA would have created Bitcoin as it exists today because it disperses too much power to too many individuals that are not under the control of the U.S. government, which is, DARPA's master. So on the face of it, I think that's kind of silly. As far as Satoshi Nakamoto, whether that's one person or a group of people, I considered both sides a tiny bit, but it doesn't seem like an interesting path of inquiry because, who cares? The idea that Satoshi Nakamoto came up with is brilliant, and I love it, and I think everybody here thinks it's a great idea. So I leave it at that.
I think you're right, actually, and I think if he is a real living, breathing person, he was correct to not be involved and have his personality and his being involved because that's somebody that people could go after if they wanted to do that, and who knows what would happen. Reggie, why do you call this new product that you've created a form of arbitrage? Would you explain what arbitrage is to the public? And then because arbitrage, I used to remember years ago, I thought arbitrage was bad, but you're saying it's a form of arbitrage. So what is it?
Well, arbitrage is a way of taking advantage of inefficiencies that are in the market. Basically, you make two transactions at the same time or close to the same time on the same or very, very similar product, and you capture a spread or a difference in price. And basically that closes the inefficiency if done enough times. For instance, if you could use a car example again, if you're in California and they're selling Mercedes-Benz 560 SLs for $120,000, and then in New York they're selling the exact same car, same model, same color, same year for $150,000. To arbitrage that opportunity, you would buy the Mercedes-Benz in California and at the same time sell it to somebody in New York. and you capture a $30,000 spread theoretically without taking any risk, because you're buying and selling at the same time. So what my product allows you to do is to do the same thing if you find inefficiencies, such as a difference in the price of Bitcoin between one exchange and another, or a difference in the price of another fiat currency that can be translated into Bitcoin in two different areas. So you buy in one spot, you sell in the other spot, same product, same situation, the only delta or difference being the price, and then you capture the difference in the price.
Okay, and Andreas, can you talk to us about what Moore's Law is and explain it? Because I heard you talk about it. I remember George Gilder very much introducing Moore's Law. Can you explain it to the public for us?
Sure. Gordon Moore was the founder of Intel, and he posited that computer density, or the density of a silicon chip, or the transistors on a silicon chip, would double every 18 months. So either you can look at it two ways. Either computers get twice as powerful every 18 months, or the same computer costs half the price after 18 months. And we've been on track and seeing Moore's Law, sometimes faster, sometimes slower, since this was first predicted back in 1970-something. And Gordon Moore really set the terms for what it meant to have a technological revolution, and how silicon chip density has led to miniaturization, lower energy use, et cetera, in all electronic devices, which makes things like the iPhone possible today. Bitcoin itself uses computation to achieve trust, so Moore's Law applies to how fast that computation can increase over time, and that supports the security of the Bitcoin network.
And I'd like, Dave, can you talk about why you feel or don't feel that Bitcoin is private? It seems like there seems to be available where you can see everything that a company or a person is doing. I understand the concept of transparency, but I don't think businesses need to show every time they make a transaction. Isn't that private?
Sure. I think Bitcoin, I would consider Bitcoin private, and it's really, it puts the choice into the hands of the person who owns the account. If I own an account, I can prove it. And if I broadcast that proof to the world, then everybody knows that's my account, and whatever goes into it and goes out of it, they know that I'm doing that because it's my account. But if I don't broadcast the fact that I own that account, nobody knows who owns it. I could tell people, but they don't know it because I haven't proven it. As long as I don't offer the proof, it's anybody can guess. And that proof, the way that you prove it is you sign something with the private key of the address. And if I don't do that, then that's the proof's not there. So it's my choice whether or not my Bitcoin transactions are private, related to that one address. And I could do that with lots of addresses. So it leaves the choice in the hand of the individual.
Reggie, do you feel that Bitcoin is private enough?
Well, it's a very relative question. Private enough for what?
In other words, do you want every transaction of your business known to all the people who look inside the Bitcoin transaction? I've never been in it, so I don't really know what I'm referring to, but I would imagine it would be a long list of everybody's transactions, right?
Yeah, there is a long list. The blockchain is supposed to be a permanent list of all transactions on the Bitcoin network. But again, as the other guest just said, these are long cryptographic strings, like hash strings, a string of maybe 25 to 50 alphanumeric symbols. And unless you, again, come out with your own, unless you identify yourself, nobody knows who you are. You can see there are a lot of transactions, but you don't know which transaction belongs to who. So you have a string of, say, 50 alphanumeric symbols. You don't know if that's Reggie Middleton or if that's Santa Claus.
Andreas, you had shared something in one of your speeches about there's a certain protocol that you use to make sure, I think you use different machines for using Bitcoin. Do you remember talking about how you would plug in one machine that you were doing something to keep it private. Do you remember what that was?
There are a lot of different mechanisms for keeping your transactions private. As Reggie said, just because there's a transaction list that shows that a certain account number sends money to another account number, it doesn't really help, because an individual can have thousands, tens of thousands, millions of different accounts, and these accounts are in no way identified to the individual, so actually tracking anything is pretty hard. But beyond that, it's pretty easy to use various technologies to remix your transactions. So instead of sending a transaction directly from one person to another, what you can do is you can mix it with hundreds of other transactions, and then, in that particular environment, you protect your privacy. It can still be tracked lawfully, with a subpoena, but at the same time, someone just looking at the blockchain and looking at the list of transactions can't figure out what money is going where. So as David said, the owner of the Bitcoin has the choice. They can either have a fully transparent environment, and that's actually really useful for charities to use open accounting, or perhaps for publicly listed companies to show their accounts payable and accounts receivable where appropriate. But it's not appropriate for others, and if you're a private individual and you don't want everyone to be able to track your transactions, even if it's quite difficult to do so, then you can take privacy measures from the simple to the very extreme, very strong anonymity and privacy within Bitcoin. It has a whole range.
And gentlemen, we're going to now open up what we call our Starship Bridge, and I'd like to know if anybody's there and has a question.
Yes, I do. My name is Terry Woodward. For someone lacking a computer savvy, explain how Bitcoin, please, is acquired and utilized in a transaction by a consumer, and who sets the value?
So the way you would use Bitcoin as an individual, you can download some software to your computer or your smartphone. In order to get Bitcoin, there are really three different ways to do that. One is to open up a type of brokerage account on a Bitcoin exchange and then wire some U.S. dollars to it and then buy Bitcoin with those U.S. dollars at the prevailing market price. Second way is to use localbitcoins.com, which is like a Craigslist-type service where you can find people in your area. Plug in your zip code. It will tell you who around you will buy or sell Bitcoin. You can find, say, a seller with 100 positive reviews who's willing to meet you at a public place like a Starbucks or a park. You hand them $100. They give you the equivalent amount in Bitcoin. Safe, secure, instant. A third way, of course, is if you have a skill that people want to buy for Bitcoin, then you can sell that service or product for Bitcoin and start a little Bitcoin business, or take your existing business and start charging in Bitcoin. So those are the three predominant ways to get it. A transaction basically looks a bit like sending an email. So you say, I want to send to this account, I want to send this much Bitcoin, and you hit enter, and off the Bitcoin goes. And a second later, it pops up in the other account, and you can see that the other person has received it. And you can do that in person with a smartphone, or you can even get their account over email and send it to them even if they're on the other side of the planet. Finally, the price is determined simply based on the market dynamics, just the same way that the price of IBM stock or the exchange rate between the U.S. dollar and the euro is determined simply based on how much the last two parties who exchanged it were willing to pay to each other for that exchange, that trade. So it's a free market. It's an open market like a stock market. Bitcoin is traded 24 hours a day, 365 days a year. The market never closes. And at all times, you can go and see, for example, by going to a site like bitcoinaverage.com, you can see the current price of Bitcoin across dozens of exchanges around the world in a number of different currencies, so dollars, euros, or yen, or whatever.
Go ahead.
Sorry, Kim. I just wanted to say that if you find somebody that has Bitcoin, they're going to set a price. And if you look at the rest of the market, you might decide, well, that price is too high for me, or you might take it, and that's true of everybody who has Bitcoin and is willing to sell it to you. So who determines the price? It's the same as, anything else, milk or eggs or wherever. You go to different stores, you get different prices because everybody selling it has their own needs.
Thank you. It sounds like from what I've heard today from you folks is that Bitcoin almost is flawless. And one of the things that, as an attorney I'd be interested in is the no trust contract. It sounds like while the terms are trying to be met, the Bitcoin's held in abeyance, if I understand, in the blockchain. And once the conditions are met, then the Bitcoin is released. Am I correct on that?
Reggie?
Yeah, that's pretty much how smart contracts work.
All right, my question is then, what if the conditions are not met? Then you have this Bitcoin held in abeyance, and you have an international contract dispute.
Well, there are several ways you could do it. From the simplest way is if the conditions are not met, and the conditions are not met due to, let's say, fraudulence or negligence of one party, there's an incentive not to be negligent because your funds are put at risk as well. In my contract, each side puts up money. They put up principal, they put up collateral. So if I try and cheat you, it's not as if I don't get your money, I don't get my money as well. Okay, so there's no financial incentive for me to be negligent or fraudulent. Okay, there's also another way of doing it by using a third party called an oracle, which is a non-interested party and a party that is unbiased and doesn't have any stakes in any interest in either party or stakes in the transaction. And that could be a decision maker, an arbitrator. Okay, so there are various ways to go about it. My contracts are very simple in that it's a financial transaction, and once the contract is entered, there's no way to back out of it. No, you enter the contract, you set a expiry date. Let's say the expiry is 3 hours. And in 3 hours, I swap U.S. dollars or I swap euro for Bitcoin. Well, if Europe goes up relative to Bitcoin, then the person on Euro side will have a profit, and the person on the U.S. dollar side will have a loss. There's no way to back out of the contract. It doesn't matter whether you agree with it or disagree with it. The contract is done. At the end of the expiry, there's a settlement in cash, and cash would be Bitcoin in this particular instance. But if it's something a little more complex that has a physical asset, such as an importer-exporter, where you use my contracts as a letter of credit, and somehow upon delivery you find that there is not true specific performance, then you can use an oracle, which is a third party. Okay, but again, realize that when both sides have to put up principal and collateral, there is no financial incentive to defraud because you're out of your own capital. Well.
Did you get your question answered? And do you have another? First of all, did you get your question answered?
Yes, thank you.
And do you have another question?
Yes, I have one more question.
Okay.
I've heard all of you say that there's been many attempts to hack into Bitcoin, but as a consumer who is naive, and I see advertisements for Bitcoin ads all over the place now, it hasn't been hacked. But that sounds to me as the old adage, the unsinkable ship. Well, the Titanic sank. If it can be, usually it is. So how would you, all of you, address that just because it hasn't been hacked doesn't mean it won't be?
Wait, hold on.
Because I think I have a different perspective than many of those who are from a purely technical background. I'm more of a financial entrepreneurial background, but I'm a nerd, so I like technical things, but I'm not a programmer per se. I don't believe that Bitcoin can't be hacked. I don't believe that anything can't be hacked. If you can build it, then you can break it down. So if someone's able to construct it, someone's able to hack it. But that being said, you have to look at how it was built and what it was built upon. It was built upon cryptography. It was built upon the science of security and hiding things. So it is very difficult to be hacked, and the more mature it becomes, the harder it is to hack it. But if you do come up with things such as quantum computing or the ability to hack it, the algorithm can evolve just like the methods of hacking it evolve. So if Bitcoin is hacked, it's hacked. Everything else is hackable as well. And if the technology behind Bitcoin is hacked, again, like another guest has said, the technology behind what secures nuclear missiles, the 256-bit encryption behind all of your banking transactions, etc., are also hackable. So it's not as if Bitcoin cannot be hacked, but it is by far no less secure than some of the most important transactions taking place on Earth right now, such as military, such as very high-end financial.
Dave, do you agree? Dave, do you agree? And then I want to find out from you, Andreas.
I agree mostly with that. I wanted to say that if the Bitcoin if the whole thing was hacked. And I'm going to disagree with Anthony on this, because at the beginning he said that the 10 billion market capitalization of Bitcoins, all Bitcoins that exist right now, that's a high incentive, but it's not, because if it were hacked, people would know it was hacked, and the value of Bitcoin would drop to just about zero, and the hacker would lose. He would lose everything except the proof that he now has, oh, I hacked Bitcoin, look at me, I'm so great. Yeah, you're great, and you have nothing. You have 10 billion little pieces of something that's not worth anything anymore because you ruined it.
And more importantly, what makes Bitcoin, with so many brains behind it, if it were to be hacked, almost immediately it would be forked, which means an offshoot would shoot off, and somebody would fix a hack and, again, make something new. Bitcoin, to my knowledge, has never been hacked, but there has been a hole, a flaw, a security hole was found. Okay, it was found and it was sealed before anybody was able to take advantage of it, and the blockchain was forked, and a new avenue of Bitcoin, became prevalent. And that's probably what would happen if someone successfully hacked it. I mean, once it is hacked, it will be discovered fairly quickly, and it will most likely be, in my further creative imagination, forked rather quickly. The new fork will have the hack sealed, and it will go on. It's think of it as something that can evolve on its own. And doesn't evolve on its own, but evolves as a result of the work of everybody who basically mines Bitcoin, monitors, trades in it. So it is not like there's a static. It's not like a bank that you break in. If you get into the vault, you get the money run out. That vault is moving. It's evolving. There are a lot of people building that vault constantly. So when you break into the vault, and someone sees that you break into it, they're going to seal the hole, they're going to move the money, and life goes on. So it's not quite as simple. It's not quite as simplistic as, there's a rob the bank, take the money and run.
Andreas, do you have input on this?
Well, yeah, I mean, I'd like to point out that, what we're talking about is a matter of degrees. Can an individual account be hacked? Can an individual have their money stolen? Yes, and that happens relatively regularly for individuals who have their own computers hacked, not Bitcoin itself. Has Bitcoin had bugs? Absolutely. It's had lots of bugs, and these have been fixed. And we continue to fix bugs on a daily basis. The point is, can you hack Bitcoin to such a degree that everything is hacked top to bottom? And that hasn't happened. And even if someone started to do that, they'd be discovered, and we'd make the necessary changes to fix it. Just like any other system, you have to take security measures. I'll tell you one thing, though, that won't happen with your Bitcoin account. No one's going to bail in your money for the Bitcoin account. No one has already hacked it with a massive quantitative easing system that turns your money into worthless paper. I would say the dollar's already been hacked at a massive level. Most of us are just not aware of it. So, it's all a matter of perspective and risk. And Bitcoin represents some risk, but it also gives a lot of control and power to the individual user, whereas in other systems, just because you see a number on your bank statement doesn't mean your money's actually there, or that when you go to take it out, it will be there for you, as people in Cyprus found out very recently. So, you have to take every financial system and look at its weaknesses and risks. And Bitcoin has its technological risks, but it also has a lot of security and control.
And that's beautiful. And my last question to all of you, and thank you very much, Terry, great questions.
Thank you.
And then I want to get to the crowdfunding side, and if you all would like to stay on, you're more than welcome. And if you feel that you've had the Bitcoin flight, then you may say goodbye. But the last question regarding Bitcoin is the following. Ellen Brown, who wrote Web of Debt, who's working on a public banking system, feels, and along with other people, that it's a speculative bubble, that it's speculative and it's also a bubble. Do you agree? Obviously you don't. I don't think any of you would agree, but I'd like to know your response, starting with you, Dave.
Well, first I have to think of what exactly do people mean when they say a bubble. Well, what they mean is they're predicting that it will pop. And Bitcoin has popped several times, but it's still worth more than half of its all-time high, let's say. So as far as being speculative, speculation is what got us into the air and airplanes on the part of the Wright brothers. And there's all kinds of things where we speculate and we think and we try stuff, and certain things don't work work, but other things do work. Now, Bitcoin appears to be working, and I don't expect that to stop. So you interpret the answer about whether or not it's a bubble any way you want, but is it going to pop? Oh, it pops every now and then, but it starts inflating again because it has value.
Okay, Reggie, what is your answer to this?
Well, I tried to answer that in part in my introduction, that as a standalone currency, it does look bubblicious, but for what it is, a currency with its own transmission system that allows you to totally sidestep all money center banks, all central banks, including the granddaddy, the Federal Reserve, Citibank, J.P. Morgan, Goldman Sachs, and the fact that it's instantaneous transmission of currency of value. And I actually just scraped the surface. It is also a matter of decentralized decision-making. You can take Bitcoin and you can move real estate along a blockchain. That's something that is in R&D in my house, in my labs right now. We're actually transferring real estate along a blockchain, intellectual capital and property, a whole variety of things. I think it's undervalued, but it's undervalued due to a drastic misunderstanding. But that is as decentralized system of trust, decentralized ledger, and not just as a currency. Now, as for the bubble and comparisons to things such as tulips, Bitcoin has a significant intrinsic value. The intrinsic value of a tulip, best case scenario, is a flower, a plant, some stems. Okay, the intrinsic value of a system that allows you to sidestep the most powerful financial institution in the world, and its 10 major shareholders, the money center banks. Let's put a value on that. More than an ounce of gold, more than an ounce of uranium, platinum, plutonium. But again, people are looking at it and comparing it to a dumb fiat currency such as a dollar or a euro. And they simply don't understand the system, which is understandable in and of itself. But I think it's the responsibility of the media and the financial pundits who comment upon it to understand what it is they're commenting upon. And that's why we have shows such as yours.
Thank you. Andreas, what is your feedback on this?
Yeah, I think a lot of the people who are buying Bitcoin right now are doing pretty wild speculation because of the price without really understanding the fundamentals. So there's certainly a bubble sentiment. And we have seen 4 pops so far. Each time it popped to about half its high, and then it recovered and quickly surpassed the previous high and has increased in value since. This is going to pop several times more. It's part of the adoption curve at the moment that it will go in these rapid rises and then pop and then retreat a bit and then keep rising again. I think we're going to see this pattern. The Internet had a very big bubble in 2000, and yet what was left behind was a tremendous amount of value and investment, and it didn't invalidate the underlying fundamentals. I don't think the people investing understand the fundamentals, but that doesn't mean they're not there. This is the Internet of money, and it's enabling hundreds and hundreds of startup companies and enormous amounts of investment. This is not just about using Bitcoin to take a small market share of the existing economy and to do transactions in the existing economy any more than the Internet was about taking over the telephone calls between different countries until all of the calls were on the Internet and then we won. Now, the whole point is that this is creating its own economy within Bitcoin, with startups, with innovation, with financial innovation, with new jobs, and people being paid entirely in Bitcoin, and that creates intrinsic value as well. There's the fact that it's a very useful currency. There's the fact that it has its own economy. There's the fact that it's unleashed a wave of innovation, and there's a lot of investors investing in real, tangible innovation in here. So, just because most people are investing because it's a bubble and don't understand the fundamentals doesn't mean the fundamentals aren't there.
Ladies and gentlemen, I want to thank Reggie Middleton for joining us to talk about Bitcoin as a decentralized payment system, as a trading platform, as a way to do business. Reggie, thank you so much for joining us. I learned a lot from you, as I always do. I think we all learn a lot from you. And have a great day. Lots of love to your children. Thanks again.
Okay, thank you very much.
All right. So we are going to the crowdfunding session. Now, 34 years ago, I started my version of crowdfunding. The version was that I wanted to set up something to bypass venture capital, and my vision was to use Western Union to pump payments to bank account. In other words, for people, whether they had cash or whether they wanted to use wire services to fund next generation solutions and discoveries And I was under the impression 34 years ago that this would happen. I just didn't understand why it couldn't happen 34 years ago. Well, I understand there was no internet. There wasn't a consciousness. Most people didn't understand central banking. In other words, the internet has allowed people to learn a lot about their world and technology. So I want to introduce you again to Sam Guzik, who is a SEC lawyer. He's a corporate securities lawyer, and he has 2 websites, corporatesecuritiesLawyerblog.com and GuzikLaw.com. And I was very excited because I went to Ruth Hedges' crowdfunding conference in Henderson, Nevada, Crowdfunding Roadmap. I want to thank her for making that happen. It was an extremely educational conference, and for those of you who really want to understand both donation and equity-based crowdfunding, you really should attend her conference. I also want to thank Michael Markowski of StockDiagnostics.com for mentioning this to me so that I could go and attend. And it was at this conference where I talked to hundreds of people, sat in the front row, asked a lot of questions. They were looking at me like I was Columbo. Thank God I don't look like Columbo. I'm sorry, Robert Falk, or Peter Falk. And, you probably didn't have enough coconut oil. I'm very sorry about the whole thing. And Sam was by far the most clear, the most knowledgeable about crowdfunding at the equity level, particularly when the securities ban had been lifted in September from the Jobs Act. And I've invited him here, and we're going to talk about really where does the rubber meet the road. Is this equity really available? What are the details? And so, Sam, I'd like you to explain what really happened. What is equity crowdfunding? What is the reality of securities, and whether we can raise money using equity crowdfunding?
Okay, great. First, let me just give you, if I can, just a little bit of background here on crowdfunding. Crowdfunding really became a phenomenon through the internet back in 2007, 2008. You had a major platform, very visible, called Kickstarter. Crowdfunding essentially is getting large groups of people to donate typically smaller amounts of money on an internet platform. And it's a broad spectrum. It can be a social project, it can be a charitable project, civic project. And what happened along the way, it can be people use it to pre-sell consumer products for their business. What happened one day is somebody decided, hey, I'd like to crowdfund and give people an interest in my business. The problem with that is back in 1933, this country passed a law called the Securities Act of 1933. And basically what it says, if you want to sell securities, then you either have to register those securities with the SEC or you have to find an exemption. And guess what? There was no exemption because you're going out to large numbers of people who you have no relationship with, and that's what the registration process was intended to apply to. So what happened was the folks that really got behind crowdfunding, they went to Washington, they knocked on the door of a lot of people, and that resulted in the Jobs Act of 2012 being passed in April of 2012. And that set up a structure to basically create an exemption from federal securities laws for crowdfunding. Now, the unfortunate part is that Congress left the implementation of crowdfunding to the SEC through the rulemaking process. So they were supposed to do that by order of Congress in 270 days. They took twice as long. They issued proposed regulations actually in October of this year. They put them out to the public comment through a 585-page release. The comment period ends beginning of February. Hopefully we will have legal, and I'm sure we will have legal crowdfunding in the traditional sense sometime towards the middle or the fall of this year. So that's the general landscape for crowdfunding. Now, what also happened in September of 2013, also as part of the Jobs Act, is in the context of not really internet-based offerings, not traditional-based offerings, but something what I'll call rich man's crowdfunding, which is the laws were changed to allow, under certain circumstances, companies to use public solicitation, advertisement, to go out to the world, advertise private investments, and that was something that was previously illegal. The catch is it's only available to accredited investors. So if you don't have $1 million net worth, excluding your home, if you don't make $200,000 a year, then guess what? You're out of the picture. So that's not your traditional crowdfunding, and so I want to draw that line here. So the good news is we should have real crowdfunding legal sometime this year.
You really think that that's going to happen? I mean, you really think that they're going to make this available to everybody and anybody to be able to advertise and market their product or business or project? And you saw me sat in the front row of this conference, very upset that it wasn't ready yet. But answer that question, would you?
Well, in terms of the timing, I can tell you last week I was in Washington, D.C. I spoke at an SBA roundtable, and I looked across the room to the head of the Office of Small Business, who had a staffer there. They're both responsible for writing 585 pages of rules. They're committed to get this thing done. There's massive pressure coming out of Congress to get this thing done. So it's more than just an economic, a social issue, or a legal issue. This is a political issue that has an extremely high priority and visibility. It will get done. It will get done this year.
I am so excited, because to me this is the future and the potential medium by which new jobs are going to happen. If you can open up the flow of capital to companies, you're going to open up the flow of potential jobs. So to me, it's an economic incentive. It's an imperative. It's an economic imperative. I'd like to invite Andreas and Dave. And any one of you want to start with any question or comment?
I'd love to make some comments on this, because what's interesting about this particular issue is that Bitcoin also enables, through the distributed asset ledger, for the issuance of voting shares in a distributed corporation. But it does this in a way that allows anyone anywhere in the world to do this. So, we have three scenarios here. One is only accredited investors. The other one is consumers just in the U.S. being able to fund these companies through the Jobs Act. And Bitcoin offers this third option, which is any company anywhere in the world going public on the Bitcoin blockchain and issuing voting and dividend-bearing shares to anyone in the world without identification, and creating a global shareholder community. Now, if you look at those three options, which one do you think is going to take off faster? I think the SEC is going to be left behind in the dust in terms of making these regulations fast enough, because if you can already do it on the Bitcoin blockchain, that's going to bring in an enormous amount of investors from all around the world able to invest directly in Bitcoin and Bitcoin companies without any of these rules and regulations, essentially just directly buy a stock on the blockchain.
Sam, would you like to respond to that?
Sure. Your area is a little bit above my pay grade when we get into these chains and so on and so forth. But let me speak to what I do know. As far as crowdfunding, whether we like it or not, in the equity side, it's a creature of law. It's a creature of statute. It's being questioned and challenged by consumer advocacy groups who are concerned about protecting investors, to the SEC. It's a fact of life for them now, but they are going to move cautiously and will. And most importantly, it's a completely new system that's being integrated with our securities laws, and that's kind of like oil and water. So that's going to take a little bit of time. It's not going to get done right the first time. It's going to take a few iterations. Maybe there'll be some changes to the rules once they come out. Maybe Congress is going to have to do some fixes. So it's going to be a slow process. And I think really you're going to expect to see equity crowdfunding, because it is here to stay, really come into its own in about 5 years from now. And one of my passions is to be involved. I'm very involved in creating the rules, is so it works as well as it can in the beginning, because if it doesn't work well in the beginning, it's a problem. So I certainly expect, and I'm really excited to hear, and I'd love to hear more after the show about issuance of shares and dividends through this new channel of the internet. It sounds fascinating to me, and I'm sure it's real, and it's something that will happen quickly, because that's the nature of the internet.
Dave, would you like to respond to what Sam just said?
Yeah, I think I was going to say this while Andreas was talking about Bitcoin, because I think what Andreas presented is really great, but at this point in time, I think it's illegal, and I also think that there's a lot of things that are illegal, and they're really helping our economy. So basically, it's the black market. And I know a lot of people hear black market or illegal or whatever, and it makes them nervous and upset, and they don't want anybody doing that. And to me, that's horrible. It's a sign of brainwashing, because people confuse the term illegal with the term immoral. And those are two different classes of behaviors. And there's a speech by Martin Luther King, and I think he erroneously attributed this to Thomas Jefferson, or somebody else did, but Martin Luther King said, we have the duty to break those laws which are immoral, because, those behaviors that we consider doing and the government says, oh, you can't do that, we consider doing those behaviors because we saw good in them. And if we let the government stop us from doing good behaviors, the positive results that we would have achieved are not going to be here. And that's our fault, because we let ourselves be controlled. And there's something wrong with that. So I applaud the position of Bitcoin in getting around those laws. Even though it's illegal, there's nothing immoral about that. The immorality in advertising your scheme to the public only exists if you're running a Ponzi scheme, if you're Madoff. But if you're honest, go ahead.
I just want to disagree that it's illegal, because what we're talking about here is jurisdiction. It would be illegal for U.S. companies to use this scheme in order to do crowdfunding, but it wouldn't be illegal for U.S. individuals to invest their Bitcoin in companies that are listed abroad or that are registered abroad that decide to collect funds this way. And what that is really a jurisdictional issue, not a matter of law. It's a matter of the law in the U.S. does not allow companies to crowdfund this way. And what that will do is it will put tremendous pressure on the U.S. because if Singapore or Macau or Cyprus or Malta or Liechtenstein or whatever decide that they're going to allow this and make it a matter of law in those countries to crowdfund this way, all of the Bitcoin startups and all of the companies that want to do crowdfunding this way will move to those locations jurisdictionally, and they'll crowdfund from there. So it's going to put U.S. companies at a distinct disadvantage. This is not a matter of something that's illegal at all. It is perfectly legal in other jurisdictions, and what it does is it essentially provides competition for the jurisdictional aspect of the SEC. And if the SEC decides to take 5 years to do crowdfunding, and Bitcoin crowdfunding happens in 2 years, and it happens in jurisdictions that are more welcoming to it, what that's going to do is it's going to push all of those funds and all of those companies and all of those jobs outside the U.S. So I think you're going to see tremendous pressure on the SEC to adapt to this new reality.
Stand
Sure,
by.
I guess I was thinking of the companies in the U.S.
Okay, no problem.
Well, they're not going to use it. They're absolutely not going to use it, which means the companies in the U.S. will be at a distinct disadvantage, because while the rest of the world or in many jurisdictions can move and crowdfund internationally, U.S. companies won't be able to do that. I think the opportunity for investors, however, to use their Bitcoin to invest in this new economy is tremendous, because it opens up not only a global pool of companies, but a global pool of investors without accreditation, without intermediary stock markets, without counterparty risk, to directly invest in a new economy.
Well, wait, hold on 1 second. Would you all stand by for just a moment? We're going to go to a quick break, and then we'll be right back. I just wanted to let you all know that Michael Markowski is the founder of StockDiagnostics.com, and Forbes magazine calls him one of its top 50 investors. He is a big proponent of crowdfunding, and he has a website called OnlineFinancialSector.com. And he's created a video called Crowdfunding is Driving Stock Markets to New Heights. You may want to take a look at that. He is an entrepreneur and a visionary investor. He's made a lot of calls about the markets for many years. He has several organizations. He is a big bull when it comes to crowdfunding. He was also at Ruth Hedges' crowdfunding conference in Henderson, Nevada. And you want to be watching Michael Markowski. And go to the site OnlineFinancialSector.com. All right. We want to, first of all, have Sam Guzik respond to what you both said, and then we'll have you both come back in. And we also have someone on the Starship Bridge. Sam.
Sure. I just wanted to address, I think, the first point that was made in this last dialogue, which is interesting, the distinction between legality and morality. And I think that's especially appropriate for crowdfunding and specifically equity crowdfunding. I mean, we have this statute that was passed back in 1933. It's here. We have the SEC. It was created in 1934. It's here. They have their function. But crowdfunding as a phenomenon started out 2006, 2007. Today it's a multi-billion-dollar industry. I mean, there's literally billions of dollars a year in crowdfunding that flows through that ecosystem and is totally unregulated and essentially is also fraud-free because of the people who in the industry who want to make it work and are self-regulating. Unfortunately, because we have securities laws in place, we now have this overlay of complexity, and some might say unnecessary complexity, and so we needed Congress to act. And the reason I think things are going to take a little bit of time is because once Congress gets involved, lobbyists get involved, special interest groups get involved. So the crowdfunding statute doesn't quite work out as one person's innovation and idea. It's a law by committee, and then we have the SEC, who's very, very tentative, works in a political environment, is more reactive than proactive, and certainly not creative. So we're going to have a process, but I think 5 years from now, we'll be looking back and we will see a very vibrant ecosystem, which, from my point of view, the biggest value is the equity crowdfunding will be a huge magnet for entrepreneurial activity in the United States. That, to me, it's its biggest value. And it's going to attract people, ideas. It's going to get them going and moving on projects that they never started on, even if they don't ultimately use crowdfunding. They may wind up going a different route.
So I want to add something to this, which is that I've had a major issue with the SEC as an organization and consciousness, because since the very beginning, the SEC has not allowed people like me, without having a huge net worth, from raising money. I would have had to have had a securities license. I can't advertise. I can't market what I'm doing. You have to gingerly be careful and afraid. God forbid you could be breaking a law. It should never even occur. All this should be thrown out, totally thrown out for entrepreneurs, visionary people, pioneers, any creatives, anybody from anywhere should be able to raise money for their venture. And one of the things I love about crowdfunding, and particularly donation-based crowdfunding, is we can do it. The sad part is that while the equity side lags and takes its own organic time due to politics and lobbyists, I love what you said, Andreas, that in other jurisdictions we can rock and roll. All of this can be integrated. And my question is to Dave, do you agree with this?
Well, sure. If you're gonna find another jurisdiction where what you're doing is legal, then that's a good way to go. But I think it's a mistake to let, like I was saying before, I want to bring up the example of prohibition. You know, this country decided that alcohol was bad in, 1918? And a few years later, juries refused to convict people who broke that law. And the states, I don't know the details, but my theory is the states decided this is costing us too much because we have our agents go out and catch people breaking the law, and then we try to convict them, and the juries say no, and so they repealed prohibition, and I think that's the right path. We have to see through the laws and say, well, that's a bad law. I'm not going to follow that law. That's silly. And I was wondering, I wanted to ask Sam this question: have people been prosecuted for breaking the SEC rules against crowdfunding, for example? And in those prosecutions, do those people get jury trials?
Well, really, there hasn't been, with maybe one exception, there really hasn't been any use of illegal crowdfunding where somebody is really crowdfunding. as opposed to somebody putting up a site and saying we're crowdfunding and the whole thing is a complete fraud. There's nothing there. That hasn't happened. What you have seen is you've seen some state regulators, not the SEC, some state regulators who don't like crowdfunding, and they have come down on certain people in certain areas. I don't want to get into that. The real risk, and I just want to get this message out, is unfortunately when crowdfunding becomes legal, the reason you want to comply with the laws is because if you don't comply with the laws, the problem is not the prosecutor, it's not even the SEC. It's the people who you give money to who decide that it didn't work out the way they wanted, or maybe they need the money to buy a new car, and they go to some lawyer and they say, can I get my money back?
But that happens anyway, right now, even without crowdfunding. That happens all the time, doesn't it, with investments? Some investment goes bad, and even though everything was disclosed and it's buyer beware, people still do that.
But with securities, sale of securities is black and white. You either follow the rules or the investor has a right to get his money back. So it's much easier, unfortunately. So that's really the risk. And the risk, too, is on not just some company that may be out of business, but the individuals that are running their company, because they'll have personal liability. So that's the thing you need to worry about. It's not really the government, civilly or
it's the
criminally.
Individual investors.
Exactly. And then, I'll say something self-deprecating. It's the lawyers out there who will,
That was the end of Sam Guzik's law practice. He just did himself in.
I'd like to comment a bit on this idea, because we seem to hold the SEC as somehow protecting investors by reducing risk or eliminating risk in investments, and that's not really the mandate of the SEC. And if it is, or whatever the mandate of the SEC is, let's look at the facts. You have the big banks colluding to fix LIBOR. No one goes to jail. They're colluding to fix gold prices. No one goes to jail. They use high-frequency trading to front-run orders against their customer interest. No one goes to jail. HSBC was caught money laundering hundreds of billions of dollars. No one went to jail. They stole $1 trillion through mortgage fraud in 2008. No one went to jail.
Bravo.
They rigged CDO markets. No one went to jail, and now they're going after crowdfunding as their prosecution. No. There's an enormous amount of hypocrisy here, because at the end of the day, they're not protecting consumers or investors. What they're doing is they're setting up a framework that prevents competition against the big banks and prevents competition against the stock markets. So, we need to take a careful look at what the SEC is actually achieving, other than simply slowing down competition for the big boys and protecting them from prosecution by giving them these sweet deals where they pay a fine that's less than the profits they made from the fraud. You reward that behavior, it's going to come back.
I love it. Hold on one second, everybody. We have somebody from the Starship Bridge. Open up the bridge again. Introduce yourself, please.
Terry Woodward.
Welcome back.
Thank you. I have a question regarding the legality of Bitcoin in U.S. transactions versus international transactions. What is the legality of Bitcoin regarding transactions conducted in the United States versus internationally, and how is a layperson to determine in what jurisdictions a Bitcoin is legal versus illegal? And what is then the motivation for anyone to employ Bitcoin then in the crowdfunding transaction if the legality is undetermined?
Who would like to answer that first?
The Financial Enforcement, FinCEN, the Financial Crime Enforcement Network, has issued guidance, and they've said that individuals using Bitcoin to buy products, goods, or services are not breaking the law, that it's perfectly legal for them to do so, and they don't require any licensing. In the U.S., actions are legal until there is a law saying otherwise. You don't need a license to do something, and unless it is illegal, then it is de facto legal under the rights given by the Constitution. So, we have the right to free association, and money is a form of expression. You can use Bitcoin in the U.S. legally to trade with anyone you want. You can also use Bitcoin internationally to send money abroad, and there's no law that says you can't do that. So from a legal perspective, that's key. What we were talking about before is whether companies that are registered can basically go public and IPO without the SEC. And, of course, there are laws against that. The Securities Act says you can't do that. So companies can't do that, but there's nothing stopping an individual from investing or sending their Bitcoin anywhere in order to pay someone, as long as they're not violating one of the existing laws. For example, you can't send money to Iran because it's under sanctions, and you can't send money to certain organizations because they're on blacklists. But other than that, any individual in the United States can do with their money and send their money wherever they want. There's no law against that.
Do you have a response to that, Sam?
No, I think that pretty much describes it. The securities laws are, in theory, they're there to protect investors. And if investors don't want to be protected, then chances are they're not violating any laws. And you're correct. There are no laws that I'm aware of on the that would preclude an investor. To me, it's no different than, let's say, a barter transaction. I mean, that'll be my thoughts.
Yeah.
Okay, what about...
And we have specific guidance from the government saying exactly that. So,
right, exactly.
This is not just something that is a gray area. The federal government has already issued opinions on the matter and said that it is perfectly legal. Now, if you want to exchange dollars for Bitcoin, then that means you are a money services or money transfer bureau, and you have to be licensed under state law. And if you operate as a company that issues securities, you have to be licensed by the SEC. But other than that, they made it very clear that individual use of Bitcoin is perfectly legal.
Did you get your question answered? And do you have any other questions?
Yes, I guess I didn't understand with respect to the difference between corporations and individuals and the legality of the Bitcoin. So thank you for clearing that up.
Oh, you're welcome.
Does anybody have anything else they'd like to say right now with respect to either crowdfunding on a donation level or crowdfunding actually possibly being involved with Bitcoin and Bitcoin actually being the funding mechanism or the money that's being used to do crowdfunding financing?
Well, I'd like to simply add that, we think about Bitcoin as a payment network and then, how much of the existing economy flows through Bitcoin. But the existing economy is in a state of depression and stagnation right now, with the exception of a few sectors involved in war and things like that. The great thing about Bitcoin is not that it's enabling us to capture more of the outside economy, but it's generating its own economy. It's generating liquidity in Bitcoin. People are willing to work for Bitcoin, and they're funding companies with Bitcoin, which is creating its own economy. And this economy is now incredibly vibrant. I've looked at more than 400 startups emerging just in the last 4 months, which are tracking and are getting funding from investors all around the world. And every day we hear announcements of more and more companies getting large influxes of investment, sometimes in dollars or yen or whatever, and sometimes directly in Bitcoin. 100% of my income is in Bitcoin, and I'm working entirely in the Bitcoin economy. And what that's doing is it's creating this little spark of economic growth in the middle of stagnant economies all around the world, where the one thing that's really working and working very well is Bitcoin innovation and the economy that it's spawning. So let's not think about how much we take over the rest of the economy. Let's think about the Bitcoin economy itself.
I think that's lovely. Dave, what do you think about what Andreas just said?
I agree. I think he's got it spot on.
Now, Go ahead.
I wanted to address something Sam said, and I heard him objecting to Andreas when Andreas was blaming the SEC, that state regulators, not the SEC, but state regulators have come down on people, trying to do crowdfunding. And I think that's an insidious, it's horrible. But I think it's taking advantage of those state regulators. I mean, when you become a state regulator, you're given a certain amount of power, and it's a heady. It goes to your head. It makes you become a bad person in some cases. Are those guys really trying to protect those little investors who they're not accredited investors, but yet they want to participate in this company, and the company saying, okay, let's do it, and then here comes the state regulator saying, oh no, you can't do that because. Yeah. And what is he really saying? He's saying you're not rich enough, you're not accredited, so you're not rich enough to take that risk. And isn't that a personal decision? And the state regulator is taking that personal decision away.
I think you're right, but I don't know if that's what Sam said. I think correct the situation. I think,
No.
Sam, you were talking about what the SEC, how they operate, right?
What I'm saying is, thus far, at least in the crowdfunding area, the SEC has been passive. It just has not been on the radar.
Right.
Congress basically forced it on them, and so they're dealing with it through the rulemaking process. That's their only role at this point. They're being very cautious because it's a completely new market.
Yeah, David brings up a good point, though.
No, and I want to get to that in a second, but I just want to contrast that or draw a sharp line between the SEC and the state regulators. The SEC is dealing now with a market with super high-risk companies, the highest risk, and the investors that they are most charged with protecting, which is unsophisticated investors. Okay, now, so they have a difficult task as a regulatory body. States are very different. And in fact, I just had an article published last week on exactly this subject, which is the SEC needing to protect small business and how it hasn't been advocating for small business, and a major reason for that, not the only reason, are state regulators, and how I've seen a dramatic change in that in some rulemaking and releases that came out in December. So if you want to read something a little bit hopeful about when our government maybe is going and the SEC is going in a better direction, take a look at Harvard Law School Forum on Corporate Governance and Finance, or if you Google my last name and Harvard, it'll come up, and you'll see that. And the reason I wrote the article is to help give some encouragement and backbone to the SEC to really stand up to the state regulators, because they are impeding our economy, the national economy, job growth. They're interfering with entrepreneurism and the flow of capital across the board.
I think David brings up a really good point, and one of the things to point out here is that one of the most active state regulators in this space is New York State with DFS. And this is the absolute height of hypocrisy. These are the same people who impotently stood by as the banks walked away with trillions of dollars in outright fraud, and they have whistleblowers and evidence up to their gills, and they have been impotent in prosecuting a single banker for that fraud. And now they turn that impotent rage in their inability to prosecute the big dogs down in Wall Street just 40 blocks south of their offices, and instead they turn it around on a little cryptocurrency and Bitcoin and try to regulate the hell out of it. I think that is just so ironic, and really it's the height of hypocrisy.
Is it the fox guarding the hen house?
Oh no, it's absolutely, it's a group of foxes all working together.
It's a fox family.
It's a completely corrupt system, top to bottom, and they use Bitcoin as a little distraction so that nobody pays attention to the trillions stolen, and the complicity of these regulators who stood by idly as this happens, and even now have not brought a single high-level prosecution against these things, even as more and more fraud comes out. Just this week, we found out that they're fixing the gold markets.
Well, that's been going on a long time.
Libor.
That's been going on a long time, fixing the gold markets and the silver markets.
Now they have
been
evidence,
manipulating
and what's going to happen? Not a single prosecution, but let's make sure we go after and regulate Bitcoin. That's ridiculous.
Well, I think when you'll see things start to change is when Wall Street gets into the picture, when they start putting some skin in the game, and then I think you'll see things change rather quickly, both in terms of laws, in terms of regulations, and most importantly, the attitude of regulators, especially in New York. I mean, New York is a financial center. And certainly,
you're licensed in New York too, aren't you?
That's correct.
See,
well,
we can always go to New York and call Sam.
So I'm not surprised at all that this is happening. It's happening in New York with the financial situation. With securities, it's not necessarily New York. It's usually not New York, but other states like Ohio, Massachusetts. There's a number of them. So.
I wanted to ask Andreas something about, correct me if I'm incorrect on this, but in one of your speeches, you talked about how only 1 billion people have access to money, and that the Bitcoin ecosystem or cryptocurrency represents another 6.5 billion. Can you explain that?
Yeah, so what I'm talking about is why Bitcoin is so important to the other 6 billion. And what I want to clarify is I'm not saying that 1 billion only have access to bank accounts. Actually, the number is much higher than that. But, there's a small sliver of the population, mostly the elites in Western countries, that have access not just to bank accounts, but to ample pools of credit, liquidity, the ability to source funds, to do investments without currency controls, the ability to start businesses and receive credits, the ability to list on stock markets, and the ability to trade internationally without any restrictions. And then there's the rest of the world. Some 3 billion people have no bank accounts at all and work in cash-only societies. And then there's another couple of billion people who have very, very little access to credit, no access to international markets. And for these people, Bitcoin represents a lifeline that connects them directly to a vibrant global economy without any currency controls, where suddenly they can interact with the rest of the world on the same basis as the tiny sliver of fully financialized Westerners who we have now. So what this does is, just like the Internet allowed an Egyptian blogger to have a voice as strong as that of a CNN anchor and speak truth to the world and have millions of people listen to him, now what Bitcoin does as the Internet of money is it allows any individual, from a farmer in Kenya to an import-export person in China or anywhere in the world, to suddenly participate in a vibrant global economy on the same basis and really invent and innovate in financial services just like Wells Fargo can or Bank of America can. That's an incredible amount of power, and the productive potential of bringing online all of these people into a new world economy is really amazing.
I want to say something about Dr. Mohammed Yunus of the Grameen Bank, who founded a banking system based on uncollateralized lending, something that was considered impossible, and he probably would have been assassinated if he dared tried it in the United States. But he did it in Bangladesh, and he came up with also all the protocols and processes for doing this. I interviewed him in 2003 in December, sent that interview all over the United States, and nobody was interested. And in 2006, he got the Nobel Prize. What's interesting to note is 2 years ago, after he built, I think, a billion-plus bank and of lending money to the poorest of the poor in Bangladesh and other countries, what was interesting is that the government of Bangladesh basically came to him, disagreed with his political philosophy, and said, "Get out, you're too old," and kicked him out of Grameen Bank. And I'm not going to let up on this, because in looking at things on a whole systems level, you look at what is the financial, how was Grameen started? What was the contractual arrangement in which Dr. Yunus signed a contract? Who did he sign a contract with? Was it the Bangladeshi government? Because the devil's in the details. How is it that the government can go, as this man builds a banking system that's never been done, as far as we know, in the history of the world, and they can walk in as he pulls in $1 billion and 30 years later and throws him out and says, "You're too old" at age 70. And not one person across the world, not one government, nobody can stop this. It's a confiscation. And what that tells us, wait a minute, Andreas, what that tells us in part is, maybe had this been financed differently, maybe had it been crowdfunded, maybe had he had better or more appropriate legal counsel with him so that he really understood his agreement, that could have never happened. Or could it have? Maybe the central bank would have confiscated it anyway, just the way the Federal Reserve can walk in and do $800 billion of credit default swaps and never have to answer it to us. How it happened, where it happened, who it happened with. What do you think?
I think this is really a symptom of centralized systems. Bitcoin isn't the first digital money. Several others have happened in the past, but all of them suffered from a fatal flaw. They had a central organization or a central set of servers, and that provided a target for people to attack, and as a result, they were taken down. But Bitcoin has no center. It's a completely decentralized form of money and a decentralized network of money. If we are able to do crowdfunding on Bitcoin or peer-to-peer lending and micro-lending, uncollateralized micro-lending on Bitcoin, there is no center. There is no guy to haul away. There is no organization to take over. There is no central server that you can attack. And, decentralized systems are less easy to corrupt. They're less easy to co-opt, and they survive longer because they're anti-fragile. So, this is exactly the kind of lesson we need to learn from the past, which is that if you create a centralized system, those who have the power will shut you down because it competes against their interests.
And look, they waited till the bank had over $1 billion. He set up Grameen Shakti. He set up Grameen Energy. He had Grameen Telecommunications. Imagine, you give the guy the Nobel Prize, right? But then what happened? He had lunch with Gordon Brown, went to London, and Gordon Brown talks him into a one world currency. I don't know. What do you all think about having a one world currency? Let's take your hit on it, Dave.
Oh, that would be great. We already have one. It's called gold. We're inventing another one. It's called Bitcoin. As long as there's no central authority issuing it, it's great.
Okay, how about you, Andreas?
Well, I think that's absolutely right. We're not going to have one world currency, but we are going to have a much more competitive environment in currency because apart from Bitcoin, there are a number of other cryptographic currencies alongside as well as precious metals. And this new model of organizing computer systems that allows you to have security and consensus through computation without a central authority, that's the core invention at the heart of Bitcoin. It takes out the central authority from the core of the network. And that has so many applications and will be part of our financial future. So, yes, it's already happening, and it's a very exciting time.
Sam, do you want to say a comment about whether you think there will be whether there is a one world currency, if we're heading toward it, and what your take is on this whole thing?
It's a little above my pay grade, but I can. But what did resonate with me is yes, we have gold, and it sounds like Bitcoin is going to find a place with gold in the digital era, in the internet era. It's easy to move bits over the internet than it is gold, and I think that's that's the difference right there. The internet is very powerful allocator of resources, and I think this is something that's going to become extremely powerful because the internet is a great facilitator and a great allocator of resources and information worldwide.
Well, everybody, I want to thank you all for being here. Andreas Antonopoulos, Dave Scotes, Sam.
Yes,
thank you.
Thanks for having me.
Sam Guzik. And for those of you that would like to go to their websites, you can go to Guzik Law, Guzik, law.com. Antonopoulos, AANTONOPOULOS.com. And Litmocracy. Would you please spell that for me, Dave?
LITMOCRACY.com.
And I'd like all of you to please share this show. This is a rockin' and a rollin' show. It's rainmaking time, and when we say it's rainmaking time, what we mean by that is people are coming together, commitments are being made, things are getting done, things are moving, and it's the dawn of a new day. For those of you that would like to advertise on It's Rainmaking Time, whether you'd like a brief mention about you and your company or a more extensive explanation of who you are and what you do, call 626-398-8652. And I'd like to thank the Rainmaking Company for sponsoring this interview. Good night, everybody. It's rainmaking time. Wait, I want to hear everybody say it's rainmaking time. Hold on 1 second. 1, 2, 3. It's rainmaking time. Woo! Good night. Thank you. Thank you, everybody.